And what we're looking at here is the basically the amount of Bitcoin on exchanges. And basically when you see, and that's what you're looking at on the orange line. And when that orange line is going down, when that balance of Bitcoin on exchanges is going down, it basically means that lots of people are buying and then they're withdrawing Bitcoin from the exchanges. And that means that there's less and less Bitcoin on the exchange, which results in, all else being equal, it results in more volatility. This is one thing that like a lot of people don't understand, is when there's less Bitcoin on exchanges, yes, that makes it easier to push Bitcoin's price up, but it also makes it easier to push Bitcoin's price down because there isn't as much Bitcoin in the order books, basically, if that makes any sense. So again, we can see that on exchanges, Bitcoin, like literally over the last, I don't know, you could say half year, the supply of Bitcoin on exchanges has been collapsing, which is kind of like the evidence, you could say, one indicator that suggests that basically there's the amount of freely tradable Bitcoin that's available for sale is declining, and there's basically, you know, more and more people buying, but not as many people selling. And this is kind of the, you could say, definition of a supply squeeze, supply shock, or whatever, is when basically like everyone is just kind of holding onto the supply and there's more and more buyers coming in, but no one is selling. You can see that really over the last year, the balance of Bitcoin on OTC desks has basically dried up. And what the result of that is basically that these investors have to go, like people who are looking to buy Bitcoin, they have to go further and further, let's say like into the wilderness, let's say, to find the Bitcoin that they want to buy. Fascinating, guys. If you actually look at the like what percentage of Bitcoin that all these like different Bitcoin companies and treasuries and whatever, you'll notice that it works out to around 30% of Bitcoin's freely tradable supply. Here it says only 16%, but people forget that like around a third of Bitcoin supply has been lost basically over the years. So if you actually do the math and say, okay, like what percentage of Bitcoin's freely tradable, that's a key word, freely tradable supply, how much of that is held by, or liquid supply, whatever term you want to use, how much of that is held by these basically institutions, and it's roughly 30%. And it's a handful of institutions, right, like MicroStrategy and these guys mostly. And what's really interesting is that this is reminiscent of what we saw in the 1980s with the Hunt brothers, which were these billionaire brothers who bought up 30% of silver's freely tradable supply. And as I've been mentioning in previous videos, if you actually look at silver's price action during the 1970s and 1980s, you can see that silver had basically 3 6-year cycles. And then when it broke out, and we're looking at the weekly chart, by the way, when silver broke out of that long-term resistance trend line in that third 6-year cycle, then it just basically went parabolic. And I've made the argument in previous videos, and I'll make it again, that we are literally seeing now the exact same thing with Bitcoin, where Bitcoin, I guess you could say, had 4-year cycles, and now it's breaking out of this, breaking above this long-term resistance trend line that was drawn by previous cycles. We can see very clearly here on the weekly that it has broken above this resistance trend line, which sets the stage for a parabolic melt up, in my view, similar to what we saw with silver in the 1980s.